So in today's video, you're going to find out how you could have made over 50% in the last 5 days using my really simple trading strategy. Now, for those of you who are new to the channel, I just use a very simple structural strategy. All right, I use the daily mostly, the 4 hour and the 15 minutes. I am known to use the 1 minute and the tick chart, but you know, I end up being chewed up and spat out like you would expect quite often. So in order for me to get back on a winning streak, so a couple of weeks ago, I had a bit of a losing streak and it really knocked my confidence. Now, this goes back to some real basics with Forex trading, and it goes back to some generalized confidence issues in general life. And that does reflect in your trading results. Okay, so I was trying to get entries, trying to fight with the market and enter on the tick chart, the 1 minute chart. And I just thought, you know what, I teach everybody the 4 hour and 15 minutes. Why am I deviating from my own plan? So I'm going to talk to you how just 2 trades, okay, 2 trades could have made you 50%. Right, I'm going to show you the trades that I got involved in and how I made pretty damn good returns over the last 5 days. So let's start off from the absolute top, all right? So looking at the daily chart, all right, we just want to see the general structure, the general direction of the market is going down, okay? The market is going down. Euro USD seems like it's just going to be the US's game, all right? There's been nowhere sort of indicating that we're likely going to have a reverse at any point in the recent future. Down here, it threw a lot of people off back in December 2021, but this was very obviously going to be a whipsaw effect to drive us back down. What you'll see on here, the thick red lines are effectively the daily breaks and daily swing structure, okay? So daily swing, daily swing, daily swing, and the low, all right? And then we've got breaks of structure. This dotted line is basically just saying to me that there was a wick structure break, okay? So I'm starting to monitor those a little bit more. I don't mind them so much, but they can indicate a reversal. All right, so we just got these areas marked out, and you always want to pay attention to the next area, so the reversal area. Okay, so there's this one, which is the most recent one. So we're technically stuck between here and here, but previous to, well, we haven't reached up there, but the obvious one, which we have just broken, was this one. Okay, so we broke with a strong body. Now, when you break with a strong body, you can effectively start looking at order blocks down here to reverse from. And covering in a previous video a couple of weeks ago, we literally tapped a 15-minute order block and we worked our way up, which is superb. Now, the initial target to break is this blue one here. This is the 4 hour structure line, because what we're expecting is price, it has broken through there, it's come up, it hasn't broken this low. I think with the velocity in which price came down, I think everybody was expecting price to break this low, all right? We're actually, if we zoom out further onto the weekly, we can see that, you know, there is a low down here. There's a ton of wicks down here, which lasted about a month or so. A ton of wicks back down there in sort of like late December 2016, but we didn't break that low, okay? But from there, actually, before we jump to anything, worked our way up, came down, created a new high over there, didn't break it. It looks as though price is going to continue its way down to this weekly order block down here, or area of interest at least. So yeah, price is working its way down. It didn't break this low, but one thing which I did was when I was on the 4 hour, I don't use indicators very often at all. Okay, I do have 4 indicators marked up on here. It's mostly literally just the inside bar, daily highs and lows, and just the time zones. All right. So I just turned on the volume indicator because I wasn't sure. Once we got down here, I thought, is this a case of this just retail traders going in the wrong direction? So on the daily, okay, on the daily, working our way down, this was such an impulsive move down. Okay, we even got a nice rejection wick to make an outside bar rather than an inside bar, which is really powerful when it's looking at reversals. And then we got 2 really strong sell-offs. And then we had this almost inside bar, all right? It wasn't quite inside bar, this white one here, but it was almost inside bar. And I thought, okay, this is just retail traders going in the wrong direction. It's going to continue down, all right? It didn't. It tagged into the order block and happy days, and rejected from it. But on the 4 hour time frame, we could see that there was just a strong push of orders coming into the market right here. So that indicated to me, as long as we could break this structure right here, which was the most recent swing between this low being broken, between there and there, it was the highest point. So that was the area which I wanted to see break. As long as we saw a break of that, I could start marking out new order blocks on the lower time frames to get involved in, okay? So we got an extremely strong push, a really strong rally straight away, but also this rejection candle. Now, when you look left, what did it reject from? Well, it filled up this imbalance, which we previously identified, which was right there, filled up that imbalance mostly but it didn't quite hit this order block. So I wasn't too worried that price wasn't going to continue up. I know it looks a little bit scary, and then on the 4 hours, it's nothing but blue candles, which means down in my world. But when you see a pattern like this, okay, so there's a pattern where you get a strong push up, a strong rally up, but if you get like a zigzag move down, that's effectively, without trying to go into too much context and too much detail, it's just a lot of orders coming in from both sides, and it's just building up liquidity, because what you'll normally get is an order block nearer down the bottom and then a takeoff, right? So that's what I was expecting to happen. It didn't have to happen, but I was expecting it to happen. So on the 4 hours, at least that was happening. But I initially identified this candle as the point of interest, and obviously that's just too big. You know, that's a 4 hour area of interest. It's just way too big. If I look at the number of pips, it's 53 pips. It's just too many to. Why would you want to get involved in? Well, you could get involved in a trade like that, but your risk reward ratio is going to be dire. It'd be like 1 to 3 or something. So I naturally decided to drop down to a lower time frame. All right, so you drop down to the 15 minutes and try to identify, first of all, where is your premium discount. All right, so the way in which you work that out is you look at the lowest point before the break of this breaker structure. All right, and you look at the high and you look at the low. So I took out my premium discount tool, which was here. Where is it? Right there. In the red zone, I class that as premium pricing, which means that it's expensive. You know, you don't really want to get in a pullback around here if you can help it. If there's no like really clear order blocks identified, you don't want to get involved in that red zone. You only want to get involved in the green zone, all right, which I class as discount because it's discounted price. If it's going to continue up, this is discount, this is premium, right? So I identified 2 potential order blocks, all right? So that one which we identified before was pretty much here, and I thought, no, this is too big. I want to try and get involved on the last candle in this case. And the reason for that, or one of the reasons, at least on the 15, is that there was a little bit of an imbalance here, all right? So this candle right there left behind a fair bit of an imbalance. Now, with imbalance, I tend to find that it normally comes down to either the 50% mark of the imbalance and shoots off, or it goes straight through into a next order block. And I thought, yeah, that's kind of like a nice catchment zone to try and catch an order off of here. Secondly, the last pullback before the break, all right? So this break of structure right here, which was was this a 4 hour break as well? Yeah, it was. So this was a 4 hour break as well as a 15 minute. So the last break before this, sorry, the last pullback was essentially here. So I identified this as a zone, but again, just a little bit too big. You know, that was 40 pips, just way too big for me to even consider, because the target was going to be up here, okay, this blue line. But we could be targeting this gap and imbalance, and then this huge, you know, 1 minute order block effectively, or 1 hour, sorry, 1 day even, 1 day order block. Now, I decided to go again for the last candle and decided to mark this up, and I used my 75, 50, 25, 0 structuring, okay, because I wanted to try and get involved in the 50%, and the reason for that is that this was still a 20 pip order block. So going like that, it's 20 pips, and I set a pending order, literally just a pending order, just sat on the 50% line, okay. So we'll get to this in a second and what happened, but the reason why I was confident to take it and confident to just sit through it, okay, it wasn't the best of trades because it was actually according to my broker feed, it was actually a 10 pip stop. It's more like that, yeah, about like that. But anyway, the reason why I was happy for this was we had multiple confluences. It was in the discount zone. We just had an extremely strong push to break this 4 hour structure, which is superb. And then we had a very slow zigzag down, okay? Price will quite often accelerate towards the zone and then shoot away, all right? So bear that in mind. So I wasn't too worried and off put by this, yet there was an imbalance left behind right here. So I was quite happy to place my order and just chill out. Okay, so when it got round to, oh, there we go, that was filled up by that. When it got to, I think it was about 3 o'clock or 3:30 in the afternoon, yeah, there we go, on Friday last week. So I noticed this initial candle, and let me move this slightly out of the way as well. This candle came down, but it didn't tap me in. Now I had an alert set on my phone for about here. So I saw the alert go off and we got a, it wasn't a tag in, but we got a spike down. And I thought right here, should I just get involved in the market straight away? But then I decided not to because it would be like a 15 pip stop loss because my stop loss will still be behind this swing here. So I decided to just keep my order on and just keep it where it was and not really worry too much and just hope that it would just slowly start trickling down. The very next candle came down and literally, I could have had a stop loss of like 0.1 pips and it would have tagged me in. But obviously the actual length of the stop loss needs to stay further down here. Okay, it needs to stay down at that point. So I was tagged into a trade right there and I was actually a little bit nervous. I was comforted by the thought that, there is demand coming into the market. Look at these wicks. Look, get rid of this, the volume as well, just because that's a bit distracting. But look at the volume coming in. Effectively, you've got the demand coming in, which is shown through these wicks. We're getting rejections off of this line, off of this area, okay? So keep that in mind. The next trade comes in, boom, there's three. There's 3 wicks right there. And I'm doing a little bit of background research and back testing into the 3 wicks. And whenever I see that, pretty much just get involved in the other direction. But I was already in. I was tagged in, I was happy, it was all good. But the problem is that it was Friday, okay? It was Friday. And I'm just gonna rush forward to about 9 o'clock when I was watching it. So I promised myself at the start of that week, effectively no more trading on the 1 minute time frame. Now, I'd said this to a few people on Discord and I'd said it on, I think it was the community part of YouTube, where I just don't want to be doing the 1 minute anymore. I do, but lately I've been getting chopped up and I've been taking stupid trades and, I was taking orders on the 1 minute and the tick chart when I was looking at the 4 hour for structure. It was just stupid and I was just getting loss after loss after loss and it was just ridiculous. Somebody with my kind of experience shouldn't be eating that many losses, and it was just ego. It was real ego. I felt to an extent that I needed to show off against everybody else who I see on Instagram. In reality, can I out trade them? Probably, but not when I'm acting like an idiot like that. So I said, right, 15-minute entries only, okay? But I did, because it was 9 o'clock-ish, it was just coming up to spread hours and the close of the week. I was quite concerned because if you go back to February, March, April sort of time, we had the announcement of the war over the weekend and we had it was probably a couple of 100 pip drop for Euro USD, and I was a little bit concerned of that happening, but there'd been nothing really that relevant in the news lately. So I thought, you know what, I'm going to stay in this trade. It wasn't enormous, it was 1% on the trade. I was up probably 6R or 7R at this point. But I was watching, effectively, there was a trade which I did get involved in, so I did break my rules. Now, I've got to admit, it is stupid of me to break my rules, especially when I say to everybody else, don't break your rules. I'm going to show you the order which I got involved in. So I saw effectively, about here, price was working its way up. It was obvious price was working its way up. Okay, it was going up and it was zigzagging down. But I could see the aggression coming in on these white candles. The white candles were largely bigger than the blue ones. Yeah, we had a sell-off here, but the white candles were bigger, the blue was zigzagging down, aggressive push-up, and I saw, again, just saw a bit of an imbalance between here and here, or actually it was the next candle, which I really spotted it. So an imbalance there was an order block right here, and I thought, you know what, I'm going to get involved, a full 1% trade right here on this order block. Alright, so effectively, I said, right, I'm going to get involved. It was 0.8 pips. I remember this from my broker feed, so I'm just going to check where I got involved in it. It was there, right? So it was the 75% mark, so the 25%, sorry. And my target was where this turned around because it was a 1 to 10 trade. So yeah, it was about there. Okay, so 1 to 10, yeah, it was about that. So I saw price working its way down to it. Let's just speed it up a little bit and tag me in. Now, I got out, funny enough, well, not that funny, but I got out right here as well. So I cut out at break even. I actually lost a little bit to commissions. So it was quite frustrating because this was kind of the perfect setup, but just on the 1 minute time frame. And now I did say to myself, I would not use the 1 minute, but I did. So we had the extremely strong breakout. If we did premium versus discount on here, all right, so we go back to here, premium versus discount, it's exactly the same format, pretty much. It's in the green zone, obviously, it's down the base. That could have been, you could have marked up down there if you wanted to, but this was the only real viable order block. We got a break of structure right there. So that was the one which I wanted to get involved in, okay? Also, I got involved on the 25%. Could have got in deeper if I wanted to, but 0.8 pip stop, not a problem. But I was nervous. Look at the time, okay? It's 10 past 9, okay? Markets close at 10. And if you close at 10, you got a 1 pip stop, and the market shoots down like 100 pips, you've blown your account. You're down to zero. It's not a case of you're down to like a bit. You're down to zero. It's ridiculous. So I was nervous. I saw price press down again, pressed up, pressed down, pressed up, and I thought, no, you know what, get out of the trade. Went downstairs, got myself a drink, came back, and this had happened. About 3 or 4 minutes in, I was up probably +5, +6, and I was kicking myself. And I was thinking, and this is something which I'm just going to say to you guys. I'm kind of glad that I didn't take that trade. Now I know that sounds a little bit crazy. Like, oh, you could have made 10%. Right there. Within what, 5-10 minutes. Yeah, 10% in 12 minutes. Really not bad. But if I had taken that and I'd won, all I would do then is this week and next week I'll be saying, well, you know what, I got a 10-1 win. It's really good. It obviously works for me. Also, another area of confluence, or another influence which I had on that trade, was right below here there was liquidity. So it's just like the perfect trade, right? You had the gap, you had the premium discount, you had the breaker structure, you had liquidity sweep down here, you had the run straight into that order block, and a perfect small stop. But if I had got it, it would force bad habits, and I just want to get out of my bad habits. Okay, so jumping back to the 15 minute, this is what happened the next day, so next technical trading day, which was Sunday night, which was technically a couple of nights ago now, and we had a drop down. Okay, so if I was in that and I'd stayed in it, that would have hurt. All right, that would have been -20% on my account, which is why another reason why I'm glad that I didn't get in and stay in through greed, try and follow all of that, because I'd have been down 20% come Sunday night. That would have hurt a lot. So anyway, this was the target, but this target wasn't established really until we got a break of this structure, because I wanted to see a break on the 15 minute. So just following the structure along, this wasn't established. This trade wasn't on at this point, by the way. I hadn't noticed this. I wanted to see a break of this. All right, so let's just speed things forward a tiny bit. Right, so once we got a break of this structure on the 15 minute, it's game time, okay? We got a nice break, a nice body break. I can work my way down and try and find where the nearest order block is. All right, so if we just do, again, like, we don't have to do this every time, but if you go premium discount, obviously it's in the discount zone, which is cool. We also have a load of liquidity under here, which is superb, which kind of feeds into an order block. So I just literally placed a trade. I placed a trade and I forgot about this. I literally forgot about it until today, and I'll show you the result of it in a second, and it's phenomenal. Because before I knew it, I was laughing my head off. So I was just sat there at my desk not realizing that I was up about 20%. But anyway, this trade goes on, and the reason why it goes on and stays on is that it stays valid. Our target, by the way, our target is going to stay with the 4-hour structure. Okay, the structure is working its way upwards. We got a swing up here. This is where the obvious target is going to be. That's where we're going. All right, so on the 15 minute, I'm just going to fast forward this a little bit because I didn't take any other trades. But you'll just see by following the market structure why I was involved in that trade, and I wasn't really too fussed about anything else. Okay. Now there's a few places. Okay, I'm just going to point out there's a few places where you could have got involved and could have got stopped out. Right, so you could have got involved there, stop out, involved there, stop out. Could have got involved on any of these and got stopped out. So maybe 3 stop outs. Probably another one coming up. Could have got involved there. Yeah, 3-4 stop outs. And then, boom, this morning. So 8 o'clock this morning, got tagged in for trade. All right, I was just sitting out in the car, I was just leaving the house, and I was tagged in. All right, didn't notice. Plus side, I didn't notice. So it was about 9 o'clock, 9:30 when I did notice. So anyway, this came down, tapped me in. If you were watching the charts at 8 o'clock in the morning, you would have seen that at 7:30. You've seen that at 7:15, thinking, well, sorry, 7:45. No, it's definitely not going to reverse. Come down, tap you in. You'd probably be punching out the trade right there for 1-to-1 because you're looking at the charts too much. All right. Next candle, boom. And then it was around about 9:30. So yeah, probably about here. Yeah, somewhere around there where I realised that I was in the trade, and I was just absolutely laughing. Yeah, I was up 1 to 10, and I'd only been in the trade for what, an hour and a half, and I didn't even realise. Okay, But the reason why I was confident to hold on to it was that was the valid order block which I held out. Okay, it had that breaker structure, had this breaker structure, and it was working its way up to here. Now, while I was in this trade as well, while I was in this trade down here, I think I just cleared that off my charts. But while I was in that one down there, I could have been crying, and I was a little bit frustrated with myself that I didn't take my profits while price was up here, because it reached up to like maybe 1 to 12, something like that. It says 1 to 14 there, it wasn't that high. But basically it reached up there and it was working its way down. And there's where the panic sets in, and it did for me as well, okay? I'm not immune to bad feelings when it comes to trading, right? I saw price working its way down. Should I have punched out? Maybe. Maybe I was a bit naive and stupid, but I was confident on this order block. Why? Because the structure is telling me that price is going up, okay? There's nothing really to say that it's going down. We're getting aggressive pushes up, and we're getting zigzags down, okay? That means that the market's running out of steam on its way down. It's just waiting to get that boost back up, okay? So I was still in this trade, just holding on to it. And it was okay, you know, it was a 10 pip stop though. It was not my best trade, but hey, I can't complain with 16%. It was just under 16% according to my breaker, but can't complain with 16% by the time it reached there. But anyway, when price got down to this, it's just literally just a case of sit and wait. Now, I had a busy day today, so I wasn't watching the charts, thank God, because I would have probably punched out somewhere along here and punched out the other trade. But it was nice to look back down at my phone at roughly the end of the day, about 5 o'clock. And it was like, oh, okay, you've been taking out a trade to take profits. Okay, so when I really looked at it, it's like, okay, there's plus 16%, there's plus 36%, bear in mind you've got commissions and stuff. So 36 and 16 is 52%. And obviously, you know, me being me, after getting a couple of wins, it's like, okay, let's drop down to the 1 minute and see what we can do. So I marked out a couple of possible trades. Obviously, I'm not in them. I haven't actually placed the trades, but I've been marking them up anyway as possible entry points. Would they have held out? Yeah, they'd have tagged in. And I actually just removed this trade as well. So yeah, I'd have been in, and with that one, it would be up at the moment, yeah, 1 to 12. But I was confident of this down to here, okay, this sort of target area. But anyway, yeah, look, really as simple as that. You know, that's how you could have made, you know, roughly 50% on your account if you trade, you know, 1% per trade, just using Euro USD. You know, it's not complicated, it's not rocket science. I teach this stuff on YouTube, I teach it on my Discord group. You know, Discord group, by the way, will be up soon. I'm on my 3rd computer in 2 months, and this one has started to crash again. So it's, I have a feeling that it's an issue with the circuit in my house because it's causing the computers to break. And if that happens when I'm on a live stream and people are paying for this, that's really not cool. So I just want to be confident enough that my equipment is going to hold out. But as soon as it opens, you know, happy days, people are going to be coming in. There's a link in the description that you can actually sign up to. So you just register your interest, let me know what your Discord name is, and I can add you in effectively. You know, there's a small charge per month, but effectively you get me teaching you and coaching you really on how to do this effectively. And also for the guys who just want to stick to YouTube, that's completely cool. You know, these are the pairs which I pretty much follow more than anything. There's a few cryptos which I just watch just for the sake of it and see how it's looking. And then there's a load of pairs which I test. But if you want me to do videos like this, you know, weekly or whatever, on different currency pairs that you use, you know, feel free to just stick in a comment and I'll try to cover it. Because if I do a video like this, like every day, this is what could have happened in the market, or this is what I'm looking to see happen in the market, it's going to be really quick if I just do Euro USD because the spread's so small. How about we do Euro USD, Pound USD, AJ, gold, so on and so forth, Bitcoin even. You know, let me know because I'll build it around you guys. But hopefully this video has been a little bit educational in terms of, you know, it's all right to hold your nerve with trading. Like, it's really hard when it is over sort of like a 4 or 5 day period. And yes, I took a risk by holding my trade over the weekend, and I feel a little bit stupid considering that it did drop. And if I'd have stayed in that trade, I'd have been crying my eyes out if I didn't take profit. So, you know, a 20% drop there, even if I'd have gained 50% here, that would have only been like probably a break-even week, considering a 20 pip drop on the account and then plus 50% would have been nowhere near a recovery. So yeah, guys, let me know what you think. If you like it, just do, you know, hit the thumbs up button, drop in a comment if you can, and yeah, speak soon. Cheers.